It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID live stream, Series 18, Episode 6. That brings us up to the grand total of Episode 108. Starts here. Well, overall, ASX have managed to lose some money this week, but it seems like major achievement compared to recent activities. They're selling out their 43% stake in Yield Broker, which is an online platform for online bond swaps and things like that. And ultimately, they've only managed to lose probably $10 million over the course of the last 10 years, which looked like a major achievement. They paid something like $65 million for it in 2014. They're going to receive about $55 million for it in the near future, having been acquired by Tradeweb. Elsewhere, the London Stock Exchange Group, they have failed to stymie the decline of their public markets over the course of recent years, but the London Stock Exchange Group is now looking to move into private markets. They're eyeing what they claim is a world-first private stock exchange. I'm not sure the folks at NASDAQ Private Market like that in any way, shape, or form, given the fact that they've been doing this for the better part of a decade. But at the same point in time, obviously something needs to be done. As the Harvard School Forum on Corporate Governance report recently noted, the proportion of shares in publicly traded UK firms held by domestically based pension funds and insurance companies fell precipitously from 52% in 1993 to under 5% by 2020. Worrying news altogether from the London Stock Exchange. Let's hope they can get their focus back on markets instead of data. Brings us elegantly to our guest today, Gedon Hertshten. We're going to be discussing markets for the next generation. Gedon Hertshten is a highly successful businessman and thought leader in the derivatives industry. His career began in 1978 as an independent floor trader on the Chicago Board of Trade at 141 West Jackson, that epic building. In 1993, Gedon founded GH Financials, a global FCM, Futures Commission merchant, servicing an array of industry participants through offices in London, Chicago, Hong Kong, and India. This led in 2005 to the foundation of the more broadly diversified Hertshten Group, Gedon's business employing now over 800 professionals in 9 countries. Gedon has been instrumental in expanding the global reach of the listed derivatives industry, recruiting, educating, and training top university graduates in various countries to increase the global talent pool and understanding of listed derivatives. Gedon remains actively involved in promoting and advocating for the listed derivatives industry on a global scale. He currently serves as a board member of the Tel Aviv Stock Exchange and has previously served on the boards of Life and CME Group. Gedon, welcome to the show. It's lovely to see you looking so well. Where in the world are you today?
I'm in Tel Aviv. Beautiful evening and beautiful weather.
Magnificent. Just turned 8 o'clock. Nice summer, late spring, early summer evening. Quite unbeatable, actually, around in the general hood at this time of year. So, how long have you been living in Tel Aviv?
In Tel Aviv itself, I don't live too long, only 3 years. Mm-hmm. But I used to live near Tel Aviv in a suburb for 36 years.
Wow, quite incredible. So, I know you, it's quite incredible. I know you through all of your activities and excitement in London, et cetera, et cetera. Tell us a bit about this career and how did you come to get started in Chicago in the Chicago Board of Trade in 1978?
Well, it's a good story. My wife started working, after we got married, she started working for her brother, which was a member, Ray Kahneman, which was a member in the Chicago Board of Trade. And she was telling me about it. She didn't like it too much, the trading pressure and so on. And she told me about it. And I thought, wow, it sounds very, very interesting. So I went down to the exchange and I saw the exchange. The first time I saw the exchange from the gallery, from the visitors gallery, and I really fell in love with the business. I didn't know anything about it, but I thought it's terrific. It sounded so much energy, it's so exciting. And I just thought to myself, that's what I really would like to do. And that's what I'm doing for 45 years.
Quite incredible altogether. And Ray Conman, what an incredible figure in the Chicago firmament he was as well. Transmarket, quite an amazing character from start to finish.
He still is one of the most knowledgeable people in the industry. He's very, very knowledgeable. There were a lot of people, including myself, that we did well, but our knowledge level was not even close to his. So he used a lot of his knowledge to do very, very, very well, and he became one of the successful traders on the floor and afterwards.
Yeah, he's an incredible character because he really did a lot of thinking, which is one of the things I always loved about Ray, because he would always talk about what he was up to, what he was doing. And I can remember in the early days when there was electronic trading after hours, etc., he really went through an incredible mindset change in order to manage to think about how to go about those markets. Quite a remarkable figure altogether. So anyway, in your case, how did you get to the CBOT floor then? What was your first job?
Oh, I started straight from day one as a trader. Even though my English was quite poor, I didn't know anything about the trading. I didn't know about the interest rates. So I just started, and it worked out for me from day one, basically.
Wow, fantastic altogether. That's quite incredible. You got there straight to be a trader. You didn't have to go through the rigors of being a runner like some of the rest of us, myself, Dr. Robert Barnes, for instance. Very, very interesting start altogether. Thank you very, very much, Martin Watkins. I see you're leaving us a message saying that you're looking forward to the show this evening. Delighted to see that altogether. Absolutely great news. And I think also Peter Sekon. Hello, Peter Sekon. Good evening. It's great to see you too. Hope Ari is well. Thank you. If you've got a question for Gedon, let's feel free to ask at any point in time. So Gedon, you started trading. You've seen, I mean, truly an incredible period of markets. I mean, I think that's quite amazing. You look at 1978, it seems like a dark age, doesn't it? I don't mean in political terms, but certainly the 1970s had been very bruising for everybody in the world. It had been an incredibly difficult period for the USA. The UK was in the doldrums. And at the same point in time, we were about to have this incredible new dawn for markets, the arrival of, I think, an incredible holy triumvirate, actually, that changed the world. There was Pope John Paul, Margaret Thatcher, and Ronald Reagan. There's three exciting dinner party guests to get together. Describe what it was like having a perfect seat as you saw markets really start to take off.
How the market started taking off?
Taking off, yeah. I mean, you know, because you look at 1978, we were just after 7 years after the deregulation of Bretton Woods. We were after 3 years after the dereg, 3 years after the deregulation of stock commissions in the USA. And then suddenly you go into this incredible decade. I mean, if you compare 1978 to 1988, 1978, there was the Chicago Board of Trade, a few other markets around the world. By 1988, everybody had a market, or everybody was thinking of having a derivatives market.
Yeah, I started trading the Ginnie Mae, which was the first financial contract in the CBOT. It started in 1978, in 1975, and I joined in 78, and it was the first contract. It was amazing. It was we were like a small group of traders, new traders. I mean, all of us, we were not full members. We had only membership to trade the financial instruments. And I guess we had no choice. We had to make some money, or we had to trade. We had no choice. And it started developing. And I remember that our knowledge level was very, very low. And basically, we traded numbers. You know, you try to buy you buy it 4 and sell it 5, and you don't know much of what's behind it in the beginning. And then slowly the level of knowledge on the floor and the exchange started growing, and people learned more and more and more, and the business started taking off and growing. And there was I remember we had to encourage, you know, what we called on the floor the paper. We had to make sure that customers are using the exchange, I mean, the trading for hedging, that they get a very good feel. And we were very, very conscious to make good markets, that the customers would not get hurt. And it worked out in the end.
That's fantastic. I mean, it's such an amazing tale because, as you say, people don't even think there was a world before the Treasury bond future. And in fact, the Ginnie Mae, which was the very first attempt at a future based on a mortgage-backed security, and therefore started that whole incredible bond trading complex, which would later go right around the world. So how many years did you stay working on CBOT?
I traded on the floor in the CBOT for 5 years until 83. In 83, I moved back to Israel. And then again, I missed the trading. So I figured instead of going back to Chicago, which I'm very comfortable, and I knew it sounded like it would be much more of a challenge for me, personal challenge, to see if I can do the same thing in London. Right. And I knew about life, and I decided in 86, I went back to trade on the flow of life, which was a great experience. It was completely different. It's different. The culture on the floor was completely different. The people were different than the Chicago people, but it was great time there.
Right. So you went to London. You start trading on the life floor. 1986, just the point in time when the life market is really getting going, having first opened in 1982, 1983. And it was an incredible time, certainly on the floor. I can remember being there from the late 1987. What then inspired you towards the idea of moving on and creating, GHF as a business?
It's a good question. I got a problem. I don't feel comfortable in my comfort zone. As soon as I feel like I'm in a comfort zone, I need some new challenge. And being a trader, and I did very well in trading, and I thought, okay, I know that I can do it. I don't know how much, if I'll be the best trader or not, but I definitely can make a very good living trading. So now I need to see if I can do other things. And starting the clearing business, which obviously I knew from clearing through a clearer, I thought it can be a new challenge. I don't know much about it, and it would be exciting to try to do it. It was quite challenging because I was a private person. I was not a company behind it, so it was all my capital. I didn't borrow any money. I didn't have partners or investors, and it was a good challenge, and obviously it worked out very, very nicely also.
Quite fascinating altogether. So what year was that you put together GHF originally?
GHF was 1993.
93. So the point in time when regulation had started to really take hold in the London markets, and we were under whether that was that FSA by that stage, I can't remember. We'd moved beyond AFBD, certainly. Very, very interesting point, though, because, 93, little did we know that actually those pits that were all having they were having their heyday in 1993. Oh, yeah. They really were.
And it felt like this will last forever. I never saw it coming. I never saw the electronic trading or the end of open outcry until the end of it.
That's quite fascinating. So you were in the open outcry business all the way to the rather bitter end. But on the other hand, you did amazingly well. It was the making of GHF when the markets went electronic.
Yeah, you had to adapt very, very quickly. You had to adjust and figure out how you pick up some customers and how you do the clearing for a completely different set of customers. Before we used to clear only locals on the floor, and now we had to start clearing others beside locals, and we had to provide the space for them and everything. So it was quite a change, which obviously I personally love changes. I love uncertainty. I love all those things. When it's a challenging time, I feel I got a competitive advantage compared to when things are good for everyone, then I don't have any competitive advantage. So I like the situation.
Well, someone liking the situation today is Ron Beat. Thank you very, very much. Great to see you, fine gentleman. You must have been an embryo remembering such good times, Gedon, in the 1970s and 80s. Well, there you go. Some flattery for you coming through. Yeah, very interesting, though, because, yes, you started then with GHF, so you were clearing kind of independent traders who were trading from effectively your own arcades, et cetera. And then the business, it was fascinating because you were able to open all of these different hubs around the world. I mean, if I remember correctly, certainly, I think you were the first international hub to go, or international player to go into the Israeli market, but perhaps there'd been other trading arcades there before.
No, they were not trading futures.
Right.
No, we were we were the first one, and yeah, it was once we moved to electronic trading, I figured that I don't have to be in the financial centers anymore, and I can, instead of try to stay in the financial center and look for talent, I will go where the talent is. And that's what was the whole idea. It's not to bring the talent to the financial centers like it used to, like banks used to do. My idea was the opposite, to take the exchange to the talent. And the talent was quite a lot of talent in the emerging markets. And that's why I started in Israel. And Israel was my first office, and we developed the model. Once we had the model running, then I started opening in different countries, and the same thing. But basically to go to places that you can find the good talent, and that's was the most important.
Yeah, that's a very interesting point altogether, because you had a fascinating opportunity, and I think it's still true today, because you look at how many people were clustered into the major financial centers around the likes of London and New York and Chicago in particular. And yet when you went to places such as, say, Tel Aviv, it was almost like an oasis of any sort of interest in these businesses, which really makes such a difference. And actually, we've got a question I'm going to go to Peter Sekon here. We're talking about the whole business of markets for the next generation with Gedon Hertshten. Peter Sekon is asking, what do you miss the most from your floor trader days at the Chicago Board of Trade where you first started?
What I missed, I love the people on the floor, because even though they were, during the trading, when it was busy, they were really very tough competitors. I mean, and they were not too friendly. But as soon as the trading stopped, or the markets were very slow and we could talk to each other, those people were wonderful. They were different people. I mean, during the trading, they were like, like in a war. And right after the trading finished or something, they were completely different people. They were nice, friendly people. And I thought that's quite interesting. And also, we had a huge mix of people. We had ex-policemen, ex-lawyers, pilots, whatever you want, you could find on the floor of the Chicago Board of Trade. And you saw that the successful traders are not necessarily, it's not connected to education, for example. It was very, very difficult to figure out what you need in order to be successful. But there was a huge mix of people, and I loved it.
I think it's absolutely true. I mean, I bore everybody regularly on this show by always talking about that great Paul Gallico quotation, where when he was a successful novelist, he still would go back and write and report on the ball games on a Saturday night in baseball in New York, and people were saying, what was the advantage to this? You're getting ketchup all over you and people are shouting and screaming and so on. And he used to say, well, the thing about a ball game on a Saturday night in New York was all human life was there. And that's certainly the thing to me about the floor. I mean, all human life was there in every possible way, shape, or form.
Oh yeah, definitely.
And it's interesting because you look at as you said, the educational background, but someone who we both know very, very well, Professor Dr. Richard Sander, who I memorably recall someone telling me about the first time they met Richard many moons ago, and they said they arrived at his office in the afternoon, and he appeared at the door, I think, chasing somebody with a baseball bat because they'd made some sort of an error. And I mean, there was an esteemed intellectual making his management point 40 years ago. And I think that's so true of how these markets have been in so many different ways. I mean, all sorts of different peoples, all sorts of wacky and wonderful different behaviors.
Oh, definitely. You couldn't find too many PhDs on the floor, but you could find everything else except.
Yes, of course. If I remember correctly, there was a PhD in the FTSE 100 pit on the floor of life, but he camouflaged himself very well, because he came down from Liverpool University to do his PhD in economics found trading so absolutely fascinating and incredible that he spent all this time looking at it. And when he went back, they gave him the PhD and said, now, would you like this position? You'll be in a fast track towards, tenured lectureship or professorship. And he said, no, stuff that, I'm going back down to London. And actually, he was one of the most voluble and semi-objectionable people during pit trading hours. You would never have realized he was actually a doctor in economics.
Yeah, I think this kind of business, I mean, the derivative attracts certain people to the industry, and I find those people are amazing. I love those people. I mean, let's say there are certain kind of characters that are attracted to risk and money and whatever the industry has to offer, and great people.
Yeah, it's an incredible melting pot altogether. So, I mean, obviously that huge issue of what developed over time for all of us, and we lived right the way through it, we saw this absolutely incredible change in markets. And actually, there's an interesting one, Woman on It, who will be here tomorrow, actually 1 hour earlier at midday Eastern time in the USA. Women on It are asking, what was the ratio of males to females at derivatives exchanges in the 1970s, 1980s, and has it changed much today?
Yeah, the rate was about, I would say 99.8 male and hardly any females on the floor. Because on the floor, it used to be in the open outcry, it used to be physical, very physical. And you had to be really being big and strong and shouting and pushing. It was extremely important. And women found it very, very difficult to survive in this kind of environment. So the number of female traders, it was very, very low, but today it definitely changed, and we see the numbers. I don't know to say percentage-wise, but I definitely know that it's much, much, much higher than it used to be in the open outcry. And it's really today in that, when you trade it electronically, male or female, nobody has a competitive advantage. I mean, female or male, it's exactly the same, which is quite nice. So it's a level playing field for both.
And we've got a great question, Gudrun, it's asking you to plumb deeply into your memory, but I'm sure you'll remember the day, Gedon, as we all do. Hello, gents, says Alex Wilkinson. Hello, Alex, great to see you. Gedon, how did you make out on the 19th of October, 1987?
I remember Alex being there also. No, I did well, not amazing, but I did well. I definitely did well. It was an amazing experience. I think I'm quite lucky when, what we call in the open outcry, we used to be the fast markets, and some of the traders used to be in fast markets. They would just move away and they would not trade because they thought it's way too much risk involved. And some were really doing very well in those fast markets. I was one of the ones that I love the fast markets. And even though I didn't trade huge, I was trading very carefully, but I did well in the October 19th. And I remember the day very, very well.
Quite an epic one in every possible respect for all those who were anywhere around the city of London on the 19th of October. Quite an amazing day. We've got a question also from Jonathan Cowan. Oh, no, he's just making a comment. Jonathan Cowan, good to see you, Jonathan. Thank you for joining us. Hello. Interesting to see Alex is on the call. Looking forward to hearing this from the hard-working master. So, I mean, Gedon, what were you trading actually on Black Monday? 19th of October.
I was trading the back then it used to be the euro market. I used to trade. I'm a interest rates trader, right. So I used to trade back then the euro market and the euro dollar.
Wow, on the floor. Yeah. And of course that was an incredible day because that was the time in the late 1980s where Life were competing to try and get the Eurodollar and the T-bond to work. And ultimately it didn't work for London. But of course, on that day it worked because the CBOT and the CME, respectively, T-bonds and Eurodollars, went limit within 5 seconds of the open or something like that, at which point in time Life was able to trade for the course of the next 2 or 3 hours as the only market in the US dollar yield curve in exchange traded derivatives.
Yeah, I still tell my employees, my traders, the stories from this October 19th. And I remember the Eurodollar moved the range from the lowest to the highest point was 295 ticks, which is unbelievable. I mean, it's hard to believe, but it happened. I remember it very, very.
It's quite incredible. I don't think it moved 295 ticks during a whole decade during quantitative easing. I mean, that is an absolutely astounding number on the day. I mean, just for US dollar rates, quite incredible. So you lived through this. Tell me, what was it like when you were looking at the whole business of the exchange and how things were moving on the course of, actually, something we've got to follow up from Alex. I'm going to go to that. Alex Wilkinson, I think you did brilliantly. Seem to remember trading a lot with you that day. So there you go. There you go. Pleasant compliment from Alex Wilkinson for that most exciting day during the course of markets.
I tried to help Alex to fill his orders.
It must have been absolutely epic when Alex was standing there in the pit trying to fill orders, and it was just total chaos all around. It was quite remarkable. So electronic trading happened. You were already quite closely involved. So you went on to the board of the Life Exchange, if I remember correctly. Was that the first exchange board you joined?
Yeah, I was in Life, from 1997 to 2005. And during my being on the board of Life was the time that we moved from open outcry to electronic trading, and it was a great experience to be there and be involved in the discussions and all those things that it's part of the history.
No, it's quite incredible altogether, and I mean certainly it was a remarkable time watching Life go into the brink and stay on the brink actually for several years, but I mean re-engineered brilliantly with CEO Hugh Friedberg and Chairman Brian Williamson, Sir Brian Williamson, as he became afterwards quite reasonably too for his great efforts. But yeah, that was an amazing time. So I mean, when you look at that sort of transition, was that the biggest transition that you saw during the course of your career?
Yeah, it's interesting. I thought about it not long ago. Definitely in my career, on my 45 years career in the industry, the move from open outcry to electronic trading was a huge move, and it was the right thing for the industry, and the industry really grew quite a lot. But another thing that was when the exchanges went public, that was another big thing in the industry, because once the exchanges went public and they were not organization, not for profit, it changed the whole industry. So that was one of the second thing that I think was very, very important, is the exchanges being owned by members going to be owned by investors.
So the demutualization and the going for profit of exchanges starts to kick off in the late 1990s. In some places, we already had one for-profit exchange, actually, didn't we? We had the OM exchange, OM Group. They were for-profit from the very start. And I do believe, actually, if we cast our mind back to the mid-1970s, there was even the muted Bermuda Futures Exchange, if I seem to recall correctly, which made a couple of appearances at Boca Raton conferences long before I ever went there, who also were a for-profit exchange. But we started with OM. Life effectively goes for-profit because it doesn't really have much of a choice. The Australian Stock Exchange closes its floor, transitions, and also goes for-profit, and really is, I think, pretty much the first major exchange that intentionally does so, and that's in the late 80s, early 90s. How did you view that in terms of both what it was like as a process and how it's worked out?
And the process of moving to a
demutualizing and going to be a public company. Yeah,
I think what I didn't realize, I thought at the time, I thought it's a terrific thing to do. I think I thought at the time the exchanges would be run much more professionally, being as a regular company, a public company. The only thing that I didn't realize later on, what will happen with the exchanges, and we see today, and now I know that, at the time I didn't think about it, but now I realize it might be a little issue. We got a situation that exchanges are owned. Most of the shareholders of the exchanges are not members. It can be big funds that invest in different exchanges, big exchanges and all over. And what happened, those funds are getting from the exchanges, they're getting dividends. And we have a situation today that the industry is paying dividend to the shareholders, which some of them are not from the industry. And a lot of money is leaving the industry every year in the form of dividends. And we're talking about probably billions of dollars every year. And this money is not being reinvested like it used to be. It's just leave the industry. And I don't think it's something that really positive long term.
What about the exchanges themselves? I think that's a very good point, by the way. I mean, the dividend flow out of the industry that's going to major buy-side funds and so on has become quite considerable. But what about the industry itself? I mean, the exchanges, have they become more risk averse in terms of really doing a lot of development work than they were, do you think, originally when they were the more buccaneering, small, mutual owned exchanges?
I think today the exchanges, definitely today, they got the power in the industry. The way I like to divide the industry into three parts. One is the exchanges, the other is the clearing members, and the third is all the participants. And those three, in order for us to see the industry growing, we need all those three parts to do very well. And then the industry is growing. When one part is doing good and the other two, let's say, are not, then it's a good chance that eventually the first part that is doing well will not be able to do well. You have to have the three of them doing well. And we got a situation now that I think the exchanges are doing very well. I think most of the participants are doing well. And I think that some of the clearers are not doing so well because we see the number of clearing members shrinking all the time.
Yes, that's a very, very interesting point, isn't it? I mean, if you look at where we are in the clearing world at the moment, we've seen the number of exchanges rationalize to a certain degree, but there are still a considerable number of exchanges doing derivatives business that weren't really 10 years ago. In fact, Tel Aviv is as good an example as any, I think, isn't it? But where there's been that rationalization, there's still a huge amount of exchange choice. Clearing members seems to me to be rather an Achilles heel for the industry because there are GCMs, there are remarkably few of them around compared to what there was in, say, Life in 1986, 1987.
Right. Yeah, and that shows that something's not right. I mean, long term. I mean, it's okay. I mean, the thing was not less. The thing with shrinking clearing members is that you have a concentration risk in the industry. Yep. And that's something that we have to worry about. And you don't see too many new clearing members coming into the market. There are some, but not too many.
It's fascinating, actually. I mean, the thing I would say is it's a concentration risk, but also there's a huge difficulty for new entrants into that space, and also actually even for customers, because if customers are looking to move to a particular market, it can be very difficult. And as we've seen recently with, say, for example, a large number of exchanges in the Middle East moving into derivatives, not just Tel Aviv, but also in Dubai and the UAE, Saudi Arabia. Very, very difficult to manage to link together your GCM to come on board with those sorts of new markets.
Yeah, and right now the system works that you need those GCMs. Yeah, and you need them, but you need them because they are really taking a big part of the risk management. And yes, right now you don't have somebody to replace them so easily.
So is there a solution? Is there a better way forward? I mean, people have been talking about this direct clearing model, et cetera, et cetera.
It's quite complicated because, yes, in the futures, for example, you got the risk that an exchange, clearing the process itself or the technical thing of it, it's very simple. I mean, the exchanges easily can do it. But the question if the exchanges can take the risk that the clearing members are taking right now. And that's much, much more serious. And it's a good chance if an exchange will be clearing and taking all this risk, then we'll see maybe the share price going down or something like this, because the risk reward will be too high.
Yes, Quite fascinating. And talking about that risk reward, actually, well, we've had a little bit of exciting, entertaining, gay banter between Alex Wilkinson, as I mentioned before, saying that he thought you did brilliantly on Monday, the 19th of October, 1987. We then had Brendan Bradley, who was presumably at that stage a pit official. Brendan Bradley was a guest on this show a number of months ago, ladies and gentlemen. He's one of the greatest product developers, I think, in the history of the exchange traded derivatives industry. He was suggesting that perhaps Alex had been trading at the wrong big figure. Alex was admitting, well, he needed a great deal of help. Well, in the meantime, Brendan has asked us a more serious question. Great to see you, Brendan. Thanks very much for joining the show. What, Gedon, made you see the opportunities that were available in India and China that others didn't, therefore giving you a diversified client base for clearing?
It's simply I saw the talent, and the talent was there, but it was a very raw talent. You couldn't find, for example, in India or China, traders, experienced traders, not even one. You couldn't find experienced traders because they didn't exist. And so in order to take advantage of the talent in India or China, you had to go in and train and coach and, mostly educate those people and turn them into traders. But you had to start, there was a big investment of, like money and time in order to turn those talented people into traders. So today you can find much more experienced traders in all those countries, but 20 years ago it was you couldn't find any experienced traders. So you had to have the ability to train them and coach them and educate them and all those things.
Fascinating. And your traders in China and India, are they trading on domestic local markets or are they trading internationally?
No, they're trading only outside of their own country. And the idea was, again, just to go there for talent. Some people made a mistake and they thought that we're going there, let's say we're in India because it's very cheap. But cheap, it's true. But if you don't have the right talent, because obviously they have to compete with people in London, Chicago, New York, everywhere. And if they're not as good, they will not make it. So it will not help me if they are cheap. The thing is, they have to be extremely the same talent, high talented people. And obviously the cost is a bonus, but that's not the main thing. The main thing is the talent.
The main thing is the talent, ladies and gentlemen, and that actually brings us very elegantly to our book of the week. As you will recall, in the course of the last 2 weeks, we introduced a book of the week. This week, we are talking about James Fox, Financial Cold War. James, of course, was a guest with us just a number of months ago talking about this book. James himself was a former executive with Hong Kong exchanges. Financial Cold War is fascinating. It's talking all about essentially how the US and the Chinese markets can be entirely symbiotic, and indeed how each's pool of capital can help the other, based upon which, of course, the Hong Kong exchanges themselves have their fascinating whole concept for the Connect program. It's a great book, really, really readable, published by John Wiley, Financial Cold War by James Fox. That's our book of the week this week. And of course, if you knew that already, that means you must be reading Exchange Invest Weekend or indeed the Exchange Invest Daily Newsletter. Weekend is free. Daily Newsletter is all about the nitty-gritty of the exchange business, where Weekend is a more varied, wider read. And of course, anybody who's interested, for the past 10 years, we have been the benchmark of the exchange of information in the business of bourses, exchangeinvest.com. So from Financial Cold War, we get back to talking about building the next generation of markets with Gedon Hertshten, the founder of the Hertshten Group. So Gedon, I mean, fascinating to see how you expanded around all of these different countries in the world. It's a real culture shock, isn't it, to see how similar but entirely different nations in the world do things?
Yeah, you one of the main things to do is when you go to another country or another culture, you cannot compare them to your own culture. And you just have to accept the way it is. You don't like it, don't go there. But if you go there, you have to respect them and accept their culture. And each culture, as you know, has pluses and minuses. And no culture is perfect. And if you go there, and another thing, it's very important to respect the people there. And you cannot be coming and trying to change them. The only thing is, like what I tell people, when you walk into, let's say, people in India, when you walk into our offices, you're not in India anymore. But once you walk out of the office, you're in India, and I have no right to tell you anything, and you can do whatever you want. In the office, you're outside India, and then you have to play by our rules. and it works, and they're accepting it. And I think the different culture, maybe even it's a really an advantage. People look from different culture, they look in the markets differently. And if you think about it, in the US, let's say, I think in the CME, like over 30% for sure of the revenues are coming from outside the US. And a lot of traders or traders in the US find it very difficult to trade their own markets, because there are now players from all over the world. And those traders are trading differently, and they look at the markets differently, and the risk appetite is different, and the way they analyze things is different. And so for the Americans to trade in their own market becomes more challenging. And that's part of the electronic trading, and you open the whole industry to such a huge amount of new players that they're playing the game differently.
So do you think, electronic trading per se, has it changed the markets to make them all more sort of globally homogeneous in the way they behave, or do they still have specific national characteristics?
No, they definitely have national characteristics, definitely. And I think that's the beauty of the markets. If before, let's say, if you look at Chicago, when I started in Chicago in 78, I was the only foreigner there. And most of the people were there from the Midwest, and they thought about the same, they got the same education or the same culture, they came from the same culture. And now it's completely different. Now it's people from different cultures are trading in Chicago. And I can tell you that some of our traders are trading, let's say, grains in Chicago. They know more about the economy in the US or about the agriculture situation than a lot of Americans that live there all their lives.
And indeed, thank heavens for the internet, which makes it so easy for those with a curious mental disposition to find out all that information, which thoroughly levels the playing field. So in terms of, we've obviously seen several revolutionary moves that you've alluded to so far. There was the move going electronic, the demutualization going for profit, and listing of the exchanges themselves. You've touched upon some of the ramifications there. And obviously, we've been talking specifically about the clearing issue, because I think that, I agree, is a very acute concern, both in terms of the provision of GCMs, the scope of GCMs, the ability for GCMs to embrace new markets, etc. What are the other issues or problems you see for markets at the moment that we need to get through to help advance to the next growth phase, the next generation?
Well, we see obviously in the last 10, 15 years, we got the algo trading moved into the industry, which contribute hugely for the volumes. Obviously, the volumes in the industry went up quite a lot because of algo trading, and I think they had a huge effect on the industry. I think today having the other markets like the crypto markets and all of those things attracts small players that used to be in our industry, and they live in our industry, the traditional markets, and they move into the new markets. And that's long-term might have effect on our own markets, because you don't have newcomers coming to the industry, and that's not something that I see as a positive situation.
Yes, that's interesting. When we had the floors, there was this sort of natural floor revolution, and you put it very eloquently. In Chicago, it was all these people who were around Chicago. We had a great conversation just with Pat Kenny and Jimmy Olaf in the last few weeks talking about this. In London, you had that amazing thing. There was the South London boys, there were the Essex boys, and sorry, woman on it really was boys 98.6% of the time. But they were all coming from these particular areas. Now that markets have gone electronic, they're more accessible than ever, but it's actually in some ways more difficult to break in.
Yeah, now, I mean, we had a period that a lot of new joiners in the industry came from the banks, for example, or from other institutions, and they moved into trading. They left let's say, the cash market, and they moved into derivatives.
Yep.
But now it's becoming more expensive and harder to move into our markets. You need the cost to move in. It's much higher than it used to be. And they're looking for places like the other markets that they can easily get in and get involved. So I think we'll see, and the industry has to pay attention to how we attract new participants, and how we educate new participants, and we help to develop the liquidity providers and all those things, and not to stay with the same players.
So that's a great question. I mean, Gedon, you're very passionate about this. How do you attract that new generation, next generation?
Well, our model is that we recruit every year 150, 200 traders every year. So we have always new traders coming to our company, and basically the new traders are coming to them. The existing market is the normal market. They don't know how it used to be to them, and sometimes the new ones are doing much better than the ones with the experience of 15, 20 years. So experience in trading, it can be, it's a huge asset, but in some point it becomes a liability, because you're basically trying to trade like you used to trade, and it's hard for you to accept that the market changed, and the whole market structure and everything changed, and you find it very challenging. The new ones don't have it, and our model is based on bringing every year recruiting new ones all the time.
So, I mean, it's a very, very interesting point you make about how you're bringing together 150 to 200 new traders a year. The model and sticking with the old model is absolutely fatal. We've all seen more than enough floor traders who went electronic and tried to do the same things they were doing on the floor, but electronically, and it cost every one of them. I don't think any of them has succeeded by using the same old tricks of the trade. Although, of course, it opened markets up more to women, which is why women on it are saying, it's not my fault, Patrick, that women were in such a minority in the exchange business. Well, I certainly didn't have any recruitment powers during the course of the late 1980s, Beata. So by the time I got there, I think I'm doing not badly at recruiting women and trying to encourage their talent. And meanwhile, Brendan Bradley's back with another cracking question. Thank you very much, Brendan. Gedon, how do your traders compete with the HFT and algorithmic trading groups?
Okay, it's a very good question, because we obviously we had this challenge. So we do a few things. First of all, we increased our knowledge level in the company. Our traders are very, very knowledgeable. We have research, and we teach our traders quite a lot. So the knowledge level in our company is quite high, which compensates for a speed or latency and things like this. It's one thing. And then the other thing, we use a lot of technology. It's the old point and click cannot survive anymore. I think in order to survive, we developed a lot of trading tools for the traders. And today they have a lot of technology, so it's not just based on a point look in the market and buying two and try to sell three. Those guys cannot do it anymore. So knowledge and technology, and we invest very heavily in technology and developed very great tools that help our traders. And obviously it shows our business is growing, so something is happening right, even though we got the competition from the algo trading. In fact, our market share is growing. So it means it's growing because obviously we reduced also latency. And don't forget, it's a situation that if you take the big algo trading, the fastest ones, they're very close to their limits. So they can still improve the latency, but it's huge investment, and they can improve it, but very little. We started much farther away from them. We can close the gap faster. We'll never get to their level, but we can close the gap between us and the top ones. And basically, our market share is growing. And in the last few years, we are just doing better and better.
Fascinating. Really, really interesting altogether. What's it been like working on the board of the Tel Aviv exchange as a non-executive director there? I mean, it's an interesting market, but despite Israel being the startup nation, the exchange itself seemed to have lagged for a long time.
Well, that change, it's challenging. First of all, the reason I joined, because I thought I can contribute in derivatives, which the derivative, it's not, they don't have futures, they trade only options. And I think they got huge potential for the derivative business. So I thought I can help in developing this market. It will be up to them to take advantage of me or not. I mean, I don't know, but I'm not familiar. My knowledge is very limited to derivatives. This is what I do. This is what I know. I don't know much about equity, and I cannot contribute too much there. But in the derivatives, I think I can contribute, and hopefully I'll be able to contribute to the exchange.
So you're contributing to the exchanges, you're bringing on 150 to 200 traders a year. I mean, it's quite incredible all around, but you also have a little sideline in real estate and other activities. Tell us a bit about that.
Yeah, that's very exciting. In fact, we own office buildings in the City of London. In fact, we got a building that we are now just got a permit to, we got a building 8 floors, and we just got a permit after almost 3 years of working on it to knock it down and build a 34th floor building in the Grace Church, is near the market there, and it's quite exciting. So we're in real estate, but we work a little different. We don't have any loans. We don't have any mortgages. We just use our own capital, and we do everything with our own capital. So, and we're not in a hurry. If we take another 10 years, 20 years, it doesn't matter to us. The time is not, we are thinking very long term. To us, long term is not 5, 10 years. To us, long term is 100, 200 years. So it's a little weird, but that's the situation. So in the company, we don't have any investors. It's a private company. It's 100% owned by me. And we don't have investors, partners, none of those things. So we can do and make the right decision, and we don't have to be under pressure of showing results right away or anything like this. We can really think long term, and that long term really gives us a huge competitive advantage.
Certainly, thinking long term and those sorts of time limits must give you a huge advantage. And being able to access your own capital has got to be quite sublime, because obviously that gives you, it loses you the major impediment to so much of real estate, where it's also highly leveraged, and therefore they have incredible issues during the course of interest rate cycles and recessions and so on. So, fascinating.
Yeah, no, we are kind of excited about the high rates. We're waiting now for opportunities to invest. So we're really ready, and we're watching. And we started with the City of London because they're comfortable, but eventually we'll be moving to other cities in the UK and other countries. That's the idea.
Certainly, I think there's a great deal of opportunity right around the world, depending on the size and scale, but 8 stories turning into 34 stories in Gracechurch Street, close to Leadenhall Market. That's quite a project. It's going to be very exciting to see that.
It is. Yeah, we're quite excited. It's new to us, and it's challenging. And we just need to be careful not to make too big of mistakes.
Well, certainly quite a public learning curve at all points in time when you're building a building that large. So, Gedon, it's been a joy sitting here talking about markets for the next generation. We're almost at 1 hour. It's been a fabulous conversation. Really, really enjoyed it. But let me ask you that question. And in fact, I think it dates back to when we first met, which would have been when I produced that book, Capital Market Revolution, 1999. Gedon Hertshten, where do you think the capital market revolution goes next?
Well, as a trader, future trader, I learned quite a lot. That one thing I know for sure that I don't know. So my answer, I don't know. But I think it's a good question, and I really try to figure out myself where we're going. But I think we may. I wrote a couple notes to myself here. We may see further integration of the DeFi solutions moving into our markets. That's what I think we'll see some of this, those solutions like a blockchain and all those things, this new technology moving into our markets, the traditional markets, and affecting our markets. I think that might happen. I think also another thing that I think we'll see maybe more harmonization of the regulation between different countries. Because right now you got situation that many times we can do some, let's say, regulations arbitrage between different countries. And I think the regulation will move in the same way, like, for example, tax situation in different countries. They exchange information and they try to, close down tax havens and so on. I think things like this will happen in the regulations also, and they will have an amazing effect on our markets. Those are the things that I think. I don't know for sure.
Well, I think that's a very wise pointer that I don't think anybody can know where the capital market revolution goes next, but we can certainly speculate. And it's a very, very interesting series of pointers from the integration of DeFi all the way through to the possibilities of greater regulatory harmonization as we move forward. And who knows, that regulatory harmonization might actually make it easier for GCMs to expand around the world as well. That would certainly be something that would be good for us all to see. So, ladies and gentlemen, that's our show for today. We've been talking about markets for the next generation with Gedon Hertshten, the founder of the eponymous, or at least acronymous, GHF Group and his various enterprises in the Hertshten name. It's been a joy to be chatting to you this evening in the idyll of Tel Aviv. And let me just say, well, first of all, next week, we're going to have Chris Sturgis. We're going to be talking about AFM, the Association of Futures Markets, coming up to their 25th anniversary conference next week in Budapest, Africa and commodities. Look forward to that next Tuesday. We're going to actually be recording that show because it's going to be recorded via the AFM conference next week. Let me also just say thank you very much, Alex Wilkinson, for all your comments today. Good to see you both as always. Great to hear from you, Alex. I still wish you were coming on this show. The invitation is still there whenever you wish to have it. Thank you to all of our other commenters and questioners. Peter Secon, Martin Watkins, great to see you. Rombeat, Woman on It, Alex Wilkinson once again, of course, and Brendan Bradley, who has a couple of really pithy questions altogether. I just want to say thank you very, very much to our production team, Fernando, Natalie, and Janella. My name is Patrick L. Young. Thank you very, very much for being a great guest, Gedon Hertshten. And I have to say, I'm looking forward to that show in the very, very long term, in 100 years, when we get back together and talk about how markets and your property deals are looking then. Ladies and gentlemen, thank you.
In 100 years from now, I'll be interviewing you.
Oh, excellent. I look forward to it, Gedon. That sounds excellent altogether. I can put my feet up. Fantastic. Gedon, thank you. It's been a marvelous show altogether. Ladies and gentlemen, I wish you all a great week in blockchain life and